Hello and welcome everyone to the weekly Delphian meeting. Thank you for tuning in. So we'll go through our regular agenda, the market update. We'll go through the earnings trades and then Joe's analysis at the end. So let's get started. So, major indice wise, all of them still holding state one, and we'll go through those charts individually. You can see, pie wise up a little bit from previous week. We got up in the 50s on state ones, kind of dropped a little bit down to 49 right now. Um, and then let's take a look at the sectors. So only transition was last week, real estate. That hasn't done well since it went in, but everything's in one except for this healthcare and then staples, consumer staples also in two, everything else in one. So all right, let's go into the market pulse here. So you can see, we've been kind of doing these peaks up in the 50s. Um, this one we had a big correction here, even, we had a pretty decent drop. The last one, not really, just kind of went flat up here when we dropped down to 50, kind of low 40s. So, hit 51 here and, just kind of looks like it's gonna kind of pulled down. We'll see how low it goes. But it just kind of seems like, at least recently, getting up around that 50, and it's kind of like at least market pulse wise, state ones, it's kind of like the top. And we get rollovers, and so this one got down to 27%. This was right around 40. It's 44, so we're at 49 here. See if we keep having higher lows, but as long as we're above, kind of like that, I think 40 is like solid. If we could look back just a little bit, that big run up, it's kind of right around 40 held, the whole time. So, um, if we can hold at 40, even with, kind of some of these ups and downs, and that's, very bullish overall. We're, seasonally, we're getting into end of the year, usually, November, December, pretty strong overall. And, we'll just have to see, kind of short term. The twos here, you could see, obviously, kind of that's where all the twos come from, the ones. So, just had a little step up here. Nothing much so far, as far as market. I think, it's set up for, like the ones kind of roll back some, but we don't know how far that'll go. Um, we look at, nothing else really. Sevens, it's kind of flat, along with the eights. It's kind of flat past couple weeks, so nothing really else there. Still popping highs, yesterday, only 100, but, still overall green here and nothing going on with lows. So, uh, let's keep our eye all those kind of, dips, in the market. We had like a little spike for the most part in the lows. So just kind of keep our eye on that, see if we get some lows building up or not. And then, if we do get more transitions into twos, kind of, this is a typical kind of pullback where the twos just really ramp up, and then, we kind of watch the fours to see if, a bunch of the twos are going to four, but fours are, on in the basement right now. So really, it's just a matter if we get, a bunch of twos, and you can check, every day, we have the transition counts, for the 4016 that we have. So just kind of keep your eye on that when you pop in there, and you got the pie too. You can just overall look at. So yeah, but overall still greens, hasn't flipped or anything yet. But, I think we have to just kind of watch, the kind of key levels and, like the 20-day moving average for SPX, things like that, 50-day for the Russell. Um, we did have, the 20s percent above and below that did flip here on Monday. So, the 50s and, uh, that'll be the first sign. The 50s still pretty far off, 200 away, way far away still. Those have held strong. Yeah, last time was like August, so it's been strong with that overall, bullish wise. So, all right, and then we can take a quick peek at just bullish bearish. Got up 66, so here 68, 71, 74. So 69. So that's kind of the range where things do like the rollover. So last time they did roll over, we only dropped, high 50s. So typically it'll want to at least try and cross, get into this range, if it does roll over like strongly, not always. You can see here, this one kind of turned along and then finally rolled. So, we'll just keep our eye on it. So, going into the modeling, SPX, we always talk about target threes, always important, strong resistance. And you can just see that right here. It's over a week kind of testing it and failing. So, the, the range, the previous range, 58 to 5400. So we're pretty much right on that 5800. Yeah, so really we need that to hold below that's the 20-day, it's kind of right below that. I think it's like 5780. So, those are kind of two critical levels to the downside support that we want to hold, in order to stay bullish. Obviously if we want to get real bullish, we'll have to close above target three, and then turn that into support. Then things can really run. But most of the time, I'd say maybe 20, 30% of the time, it'll get above there. But this one's showing so far, it's really showing us solid resistance right at that target three, which, that's where a lot of the magic of the system, these targets are really, really good. So, we've been in longer than normal, did more than the average move. So overall, it's been a good state one. But let's dive into the chart here. So I'll throw up the lines here. So here's the bottom of the range. If we get back into below 5,800. Um, so really important to hold that, 5,800, and then, that 20-day, that one's held, since this last cross back here, September. So, every time this thing cross seems like it's doing some kind of pullback. So, really, I think that's the big thing to watch is this 20-day, see if the trend continues up. Even if we don't hold 5,800, just kind of staying above, that 5780 kind of level, that'll go up each day. So just holding that 20-day, I think, we have history on that. Back here, pretty much 20-day was the key. Back here, 20-day was really a important level holding that. So, these uptrends lately have been keyed off that 20-day. So that's what I would keep my eyes peeled for, holding that level. You know, if it kind of breaks and, for a day or so, it's not a big deal, but, you're looking at kind of day or two, a couple days, closing below is kind of your sign. Uh, you know, just be careful to the downside. So that's where we're at. SPX, kind of watch those levels, 50 days, another 100 points below 20. So kind of out of range right now, and 200's way off. So if it does drop below 5,800, the bottom's that range 5,400. So very far off, but really you got these two kind of levels, 20 and 50, below that 5,800. And the upsides, all you got is, this target three getting above that, and then there's really nothing holding it back. So, this is kind of concerning. You see this kind of resistance, at, a Shook's target three. All right. And then we get into Russell. So, 27 days and 35 average. Haven't done the average move, but did hit, target two. Really, as far as this, just getting above that 2,300. We'll go into that chart, but to the downside, we have the entry price 21.89. So just call it, 2,200. Bottom of the range 2,100. Tops 23. So, but every 100 is pretty much, support and resistance. So, if we do make downside move, see if that'll hold. You can see, kind of the support here shown here, and then, took off. So we'll just have to wait and see on that one. I'll pull up the chart. So this was that last time it touched 2,300. Pretty much immediate reversal down. Actually went below the range 2,100 and 1, 2, 3 days. Then kind of rebounded, but we didn't get up to 23, but obviously you could see a couple of days here, three pretty much trying to get up there and failed. Had a pretty big move down there Monday and yesterday. Not a big deal, but for here, if bullish would be getting above 2,300 closing. Also staying above, this 50-day, which is right at that 2,200 kind of mark. So, I think the key things, overall, it's going to be, Russell above 50-day, and then, SPX above 20. Bullish wise, otherwise, things could roll over.
Hey, Josh.
Yep.
Hey, it's Lee. That
Really.
big, hey, that big drop, yeah, right there. Is that August 5th and is that related to the carry trade from Japan when they raised their interest rates?
Might have been. I don't have a. I mean, that was around that
That
time, I believe. Go ahead, Joe.
100%,
Okay.
100%, Josh. And
Okay.
and how much of that lead was tied to the carry trade? It's certainly hard to say, but I got to tell you, Lee, thanks for bringing it up. When Josh is going through this and I see that chart, it literally takes my damn breath away. That move in 3 days is just beyond crazy. And, it was definitely that period right there.
Right. Okay. Okay. Thank you.
Yeah.
And again, I think I said this before, a great advertisement for the use of options. I mean, you don't get that kind of volatility. I mean, the damn VIX went to, 66, before the opening that one day. I mean, just absolute insanity. Sorry, Josh.
Yeah, that was good. All right. Yeah, I think the big surprise for me at least has been this 10-year action. So, we kind of look at like 4 or 5 range as being really, antagonistic to stocks. So we're up like pretty much 4.25. Since the cut, it's just pretty much been marching higher. So this is definitely concerning. just having this move like that. Back here 4.7. So we're ways off, from like the highs. It got up at 5 at one point, but just kind of concerning. That we don't like, as far as stocks, you like lower crude, but you also don't want these rates going up, even though they're cutting. These are this 10-year is still open to auctions, so it's just a supply and demand type thing. So it's hard to gauge. There's so many variables with this, but just kind of, just a headwind, this, especially if it keeps climbing higher, for the market. So especially the Russell, you know, Russell likes low rates. A lot of these companies don't even make, they're pharma, don't make money. They're, living off of loaned money. So the lower rates, the better for them. Um, okay, Fed wise, speaking of rates, so the meeting, I guess, is on Thursday. So it's usually that Wednesday, but this one's the 7th. We won't change our schedule, but for the Fed. But this one pretty much, this would be 50. So what do we have? 4.75. So this one's looking 50, but we'll see. So this 4.75, this would be a quarter, and this would be 50-point hike. This is for December. Sorry, I already had to. For November, it's only a quarter. So it's 90%, almost locked in. For like a week out, it's 90. It's pretty much locked in. So this is the next one, and then December, as I said, 50. Pretty much, there's nothing below 50. Basis point cut between now and the end of the year. So that's changed a lot over the last couple months. So at least so we're looking a quarter, maybe another quarter. December, obviously going to be data dependent, but that's kind of where it's at there. And then balance sheet, they're doing nothing. Yeah, absolutely nothing. So 7,046,000,000,000, nothing. Actually, that's like a couple million. So it's just nothing. It's really slowed down. And it's just kind of like that magic like right at COVID 7 trillion mark. That's kind of where they're really slowing down. So this is kind of right at, COVID, that big bump was pretty much like up to 7 trillion. So we're on our way down, but they're really putting on the brakes here at 7. So not sure. Kind of interesting as they, cut rates, and they're still technically tightening, but I think they're definitely easing off on that. And anytime they're easing, that's definitely a big tailwind for stocks. So the less they're tightening, the better for stocks overall. So that's it on market. No good charts or graphics. So I'll open up to questions, comments. Thanks, Lee, before. Anybody?
Well,
Yep.
Yeah, yeah, Josh. We're going to. I was going to make a comment on SPX or the S&P and cyclicality, and usually September and the October till now is usually the down part of the year for S&P and most equities. And we had a really good September, and we've had a pretty good October to here, and we're at all-time highs almost in a lot of places, and bigger tech stocks especially.
Yeah.
And we're in earnings season is like this week and next week are the big 2 weeks for earnings, right? So, if there's going to be a breakout, now would be the time. If there's going to be a pullback, now would be a time I might expect that. So who knows which way it's going to go. VIX is about, 20, I think, and it's a little higher than normal. But everybody's probably thinking, well, where we're gonna go for the fourth quarter now, where are we gonna go after this? Is market go up, go down? Well, we'll
Yeah.
probably get some key takeaways by, what happens on the earnings calls in the next couple of weeks would be my guess there.
Yeah, that in the election. Yeah, we're
But
2 weeks out.
I'm kind of like you. I'm a little more worried about a downside move than worried about a big upside move, but
Mhm.
we'll see.
Yeah, well, I mean, this
Earnings are
is,
good. We'll have some bullish moves if earnings are good.
yeah, I mean, this is 20, we've had one down month for SPX, 2024.
Yeah.
Yeah, so,
But this is a
yeah,
time to be watchful, in my opinion, and not be too aggressive with your moves. I'd be watchful.
yeah, especially, I mean, just going, the uncertainty with the election. I think Sadir was saying last week, he's just kind of in a wait and holding pattern till, we get clarity on, political direction type thing, so.
I'm on board with that for a week or two.
Yeah, it's only a couple weeks at this point, but yeah, we don't know when results will actually come in. It could be an extra week, who knows? So,
Yep.
but seasonally wise, I mean, you can see November, December, some of the best months for SPX. Yeah, I guess July's the best percentage wise. Yeah, this only goes back to '07, so it's not like, going way, way back. So anyway, thanks, thanks, Dave. Lee, did you have something?
Yeah, thanks. When you're talking about the Fed balance sheet and
Mm-hmm.
how they're not draining it down, and how that's a tailwind to stock market,
Mm-hmm.
is there any indication that it may be politically motivated? Is why they're not, they don't, pardon?
Yeah, I'm not sure. I mean, I, wouldn't know one way or the other. I'm just, an analyst.
Yeah, yeah, I get that. I just didn't
Yeah.
know if there was any other data that anybody's seen that would suggest that.
Yeah,
was-
yeah, it does. I haven't seen anything else. I mean, I just kind of look at this chart and I think liquidity, like they're either, bumping up liquidity or, tightening it. That's how I kind of look at this overall. That's kind of why I track it. But I thought 50 was a little, like the cut was a little bigger. I thought they'd just start conservative, but I don't know. I mean, I think at this point it's just conjecture for us to, you know, estimate if it is political or not. We just don't know.
Right, right.
Joe, did you have any comment?
Yeah, no, nothing to add there. But interesting, Josh, when you had, I think, Yahoo Finance up, I think there was a headline about the questioning the independence of the Fed. Yeah, somewhere along there. But yeah, nothing to add.
And okay, thanks, Lee. Anyone else? Questions, comments on the market? Okay, let's go through earnings real quick. Virtual portfolios. So we are doing kind of revamping like the face look and feel a lot of stuff. So one thing I will pull up, like we've modified this custom screener. So if you guys are using this, just let us know. Um, if you see any issues or any if it doesn't work for you, things like that, or if there's ways you think we can make this look better. We're trying to make it a lot easier overall. So, all right. So two bullish pre-runners open. So both down a little. NXPI, Exxon. So this one you have another week. This over a week. So those two are open, you know, with three so far close out with hitting our profit targets. So yeah, first couple weeks were good. I think we're kind of it's kind of teetering right now. So this one um, gold's really taken off. It's down today, but it's just been climbing, you know. So hopefully we get a little pullback here. Yeah, we got till the 6th, so quite a bit of time. Same here on mRNA, Moderna, whatever, the shot people. So, and nothing close. So those are the only two. Uh, Bullish runner, Goldman, I think I went down. Yeah, I went down decent. So still got time on this one, but yeah, market pulls back, things, you know, pull back some. Vol rise. This went down a little XPO, so this will close out 29th for earnings, so another week for that vol rise. Those ones have been doing good the last few quarters. So the non-mover, this one just came in the other day, PII. So you know you can see the bands here. We got a couple weeks. So really we just want to stay above 870 and creep back to 80, in the next week or two, something like that. So got plenty of time, but just kind of starting out. The bullish pre-runners did good. So starting out the first few trades, so we'll just have to see if that continues and that's where we're at. Any questions, comments? All right, I'll throw it over to you, Joe.
All right, Josh. Thank you. Thanks for joining everybody. Let's see. Let me get this thing up and running here. All right. Thanks for the analysis, Josh. Let's see. I will start with this chart. Let me see if I can get rid of that thing. So that is the TLT. And about that retracement, and it's going here. I'll move that. That's a 1-year chart. Here's 3-year. Okay, so you can see it's a meaningful low that we had back in April, and we are banging right up against the 5/8 retracement in this thing. So to Josh's point, important level here. The markets have held up despite the move in rates, and pretty important, this 420, 425 range. So did want to start off with that. Got a bunch of goodies today. And just, the breadth of the market, just, wanted to, look again at equal weighted S&P, get up to target 3, has rolled over a little bit. It's been a very healthy state 1. We've exceeded its time. So, maybe we're ready for a back and fill to some extent, but, nothing that really isn't constructive about this. It's just if the market were to back and fill, it's not a bad thing. So that's equal weighted S&P. I did just want to go back on the flip side and look at some of the market pulse. So I wanted to look at the left side of this chart, and coming out of COVID, November 20, and just the period of time that the bullish states exceeded the bearish states was pretty extraordinary. I think we went from November to July in that period where bullish states exceeded bearish states. And when we get to those extremes, like was the case in end of 20, beginning of 21, it portends future strength in the market for the most part. And the market rallied about 23% over that period of time. So and so Josh goes through this each week. I just wanted to kind of re-emphasize, you get the choppiness, and there's actually still more, I think, I can deliver to you guys, on the extremes here. And by no means are we at an extreme at this point. But, I just think keeping an eye on, this green staying above red as Josh reviews each week is damn important. So just wanted to touch on that. And so, going forward, market direction, Dave, you were talking about, earnings being critical and, Josh, talking rates, couldn't agree more. So, started with rates and I'm going to earnings next. And, you've heard, the Lipper Services and it's the London Stock Exchange puts this piece out that I bring up fairly frequently for everybody. Free information. It's out there for everybody to subscribe to. This is October 22nd, okay, and this is the S&P 500. Basically, at this point, about 20%, 96 had reported, 81%, going through October 22nd, 81% were above expectations, 17% below. And I think the average, you throw around the 5 or 10 year average to, what's the percentage of beats? It's mid 60s, plus or minus a little bit. So certainly we've started out, quite strong on the earnings side, which, may be, and we basically had that all year. And back to Josh's seasonality chart, probably the reason why, month after month, the market continues to churn higher. So, and as Dave pointed out, next week, this week and next week are really probably the two key weeks in terms of volume of releases. Going back to this, that I think you recognize, this is the S&P 500, and they're looking for, here we are, earnings, third quarter here, third quarter, looking for earnings growth year over year at 4%. Looking for a lot more in the fourth quarter, and then all double digits next year as well. So, we've talked about this. This is, as you can see, as of October 22nd. So, doesn't seem to be any backing off from these historically very high earnings expectations, going forward, both for the S&P. And then I thought I'd pull this one up again. We only had this up one time, and of course, this is one that Josh particularly liked. It's the Russell 2000 and its earnings expectations, going forward. Now, this is dated October 3rd, as you can see. At that point, none of the Russell, there's no update in terms of how the Russell 2000 companies are doing with their releases at this point. I got my eye out for that. As soon as they give us an update, you'll have it. But with the whole scenario of lower rates, as Josh has pointed out, it's just staggering, the increases that the markets are looking for year over year with these guys. So, hopefully, we'll get some, not consensus, just some, a good batch of results for you before long. So just wanted to review those earnings expectations again, and I do have a handful of charts that I wanted to go through. And Josh talked about, the various sectors, and what in terms of the health of the market, I like to look at average move, max move, and with few exceptions, the max move has exceeded the average move, and many of the current moves are, banging up, pretty darn close to the max move. So, just healthy market from my perspective, healthy market. The three that maybe have underperformed state one, you got XLC where the average move is 10.5%. And, at this point, we're just, shy of 4. And, we're well into the move at 27 days, but a long way to go. So it'll be interesting to keep an eye on these, XLC stocks. That's you know, the Metas, the Googles, the Netflix, you got Electronic Arts, Disney, whole bunch of them. You know, a lot of those earnings are coming up. So it'll be interesting to see whether XLC is going to be a typical state one, or we're going to get some disappointment and maybe roll over. But, you know, this is one of the ones that, you know, in the current state one has underperformed a little bit versus the average. Energy's another that, you know, it's kind of underperformed actually, you know, average move 9%, you know, we're in the red for this current move. And I'm going to pull up all these charts, and you're just 10 days into energy and, you know, seems to be, and, you know, we'll see that chart. And then real estate's the other, you know, the average move is only 5.5%. We're in the red here, but we know darn well the last, you know, state one and XLRE ran on and on and on. So, let me pull these bad boys up. Here is, and just to give a perspective, you know, the last 5 years. So we're not at all-time highs, but you can see that that recent run in state one, you know, starting back here in July was a hell of a run. So sure, you know, maybe this current state one, you know, isn't going to be, you know, maybe it's going to roll over. We're going to, you know, back and fill some of this monster move coming out of the April lows. You know, we'll see. Earnings will have something to say about that. You know, so that's the first. Number two was energy. And again, there's the 5-year perspective. So, you know, looks like we got to an all-time high in this thing, you know, back in, you know, mid-August. And, you know, we got a monster trading range. It almost looks like the Russell a couple of years ago. You know, we're just going sideways. So, you know, we're in a state one that's underperformed. You know, not that big a deal to me at this point. You know, let me actually shorten this up. Yes,
Joe,
Dave. This does have.
While you're on
go
XLE
ahead.
there, I wanted to interrupt you. Sorry for that, but that's the only way I know how to do it is jump right in there. But XLE is kind of interesting. I noticed that actually the big moves in energy just lately have been with nukes. A lot of the news on we need all less electricity for our data centers and whatever, and several of the Magnificent Seven are now contracting with SMRs and nukes that are going to be built over 5 years between now and 5 years from now, but they're jumping in and investing there. That's been pretty interesting. And yet XLE, I think the dominant forces in there are Chevron, Exxon, and Occidental. I don't know what, but fossil fuels dominate the XLE. But the big moves have been not in fossil fuels, but in nukes, which is kind of interesting because they're all in that same sector. But one end of the sector, it's like the stocks within the sector are at one end of the other. Fossil fuels are alternatives. One is in vogue, one is out of vogue. It seems like all the time. Maybe that's the reason why it's kind of chopping back and forth, kind of going nowhere over longer periods of time. Well, I don't know what you think about that, but it's interesting when you think about the makeup of XLE and where the big moves are coming. Even though the ETF the ETF or the sector is not really moving too much. It's my comment.
Yeah, and I have absolutely no expertise whatsoever, in the nuke space. I maybe even mentioned, at some point, it's always intrigued me, why we don't have it. But, I've never done any reading on it. So I don't know if anybody else has any comments on that.
Yeah, besides myself, I have a lot of opinions there, but it'd be nice if to hear from anybody else, actually. Yeah, we'll see. Maybe some will come up in the near future. I think there's a lot of attention going into nuclear because it's the best bang for the buck when it comes to just creating electricity. Yet there's still a lot of fear mongering from near misses in the past and catastrophic events that happened in other places in the world a couple of times. So
yes. Well, a conversation maybe with more information for down the road, Dave. Thank you.
Yep.
and always don't hesitate to jump in. And, you know, the last underperformer were, you know, the XLC, which, but, you know, but how can you say underperform when you got a chart like this? And, you know, it really has just been a slow, steady grind up, you know, with a lot of these stocks. We are, yeah, still, you know, this one's got a long way to go in terms of time, but there we are banging up against target one. So, you know, constructive, let's, you know, chances are it's going to be earnings that dictates, you know, whether it's going to be a solid state one or just a not so great state one rolling into it too. And that's why, you know, these earnings are so darn important. I did want to go back to XLF just because a healthy or unhealthy XLF is so, you know, really critically important for the market. You know, we know this basically has been fantastic and, you know, continues to be. Josh's, you know, one of his favorite patterns, as you know, is you run past target 3 and then you pull back to target 3. So it'll be interesting, you know, over the next week or so, whether this thing back and fills to 45, 46 and then goes again. But chances are the next couple of weeks, you know, maybe we'll get some clarity with earnings behind us and the election as well. I did just, you know, we were talking about, you know, the semis last week and then Taiwan semi after our meeting, you know, had a rocket shot, you know, on its earnings. I just thought I'd pull that back up because we had been talking about it. And then, you know, here we are hanging at target 3. We'll see if we, you know, back and fill some more or this thing gets up and goes. ASML was the other one we were talking about last week, you know, with earnings and, you know, it tanked and now is just basically trying to find its footing after, you know, last week's sell-off. So, just a couple that we had up last week that I thought I'd pull up again. And yeah, I talking about upcoming earnings, you know, and especially the MAG 7. I thought I would focus on them this week because 4 out of the 7, 4 or 5 of the 7 have earned, 5 of them actually have earnings next week. So I thought I'd start, you know, by just pulling up, you know, the NDX, solid state 1, still have, you know, a few weeks certainly to go, but we're banging up against targets. So we'll see whether that's going to be, you know, real good resistance. Let me shorten this up a little bit. You know, there's, again, it's a lot of the same refrain, a lot of stuff, you know, hanging in there and basically holding close to recent highs or all-time highs. And, you know, go back to, I just got to believe it's the earnings growth. And, you know, it's, you know, we get a pullback and you get earnings, you get multiple contraction. And I think that's all we're talking about at this point, you know, when we get our sell-offs. So let's go through the MAG 7. We have, as I said, 4 of the 7 are in state 1. We got 1 and 2, 1 and 3, and 1 and 4. So, you know, here we are just to give you a look-see. You know, here's Amazon, you know, basically banging up against, let me just double check, you know, all-time highs. But, you know, like a lot of these things, just pretty constructive, nowhere near, you know, our targets. So this thing gets up and goes. It's got some room to run before we run into those natural resistance levels with our targets. Amazon, let's see, earnings are 10.31 for Amazon. Next is Microsoft, the only one in state 4. You know, we had not a good state 1 there, and you know, we got to pull back. That was when was that date? That was a date meaningful. Nah, nothing meaningful about that date to me. But so we're back in filling. But if you look yesterday, I don't know what the catalyst was, but it was a very good green candle day yesterday. Earnings here are the 30th of October, so going to be important to see all these things post earnings. There's Meta, another state one. Didn't quite get to target 3, but we're bouncing around inside the targets. And again, this thing had a decent, green candle yesterday as well. We've exceeded time in terms of the average state one by a couple weeks, but really solid state one here. Couple more with Apple, long way to go to the targets, long way to go in terms of time, and also a heck of a long way in terms of its average move. So let's see, Apple earnings are the 31st, I believe. Yes, the 31st. So, going to be another big day for the markets, the market reaction. Now, I don't know off the top of my head what the earnings results were in Apple last time around, but it didn't matter what the news was, to damn near anything. This is the period that Dan was talking about earlier, July 31st to August 5th, where everything got crushed, and this was right in the middle of that. So let's see what next week brings there. Google, another this is actually state 3. So it's kind of going sideways. These things are short. It'll be interesting. This thing's going to jump out of state 3 pretty soon. It's long exceeded the average length of time for state 3. So maybe it's going to be the earnings on the 29th. I think this is the earliest, with the exception of Tesla, whose earnings are tonight, next week. Google is the first one to come out before the 3 come out with theirs. They get Tesla, which is due tonight. Couple interesting things that jumped out at me a little bit. And they're looking for 60 cents versus 66, I guess, same period year ago. They're looking for an increase in revenues to north of 25 bill, where I think previously it had been 23 billion. I just think it's damn interesting. It's been such a tight range, for a few days here, just basically waiting for this. So it'll be, Tesla, a little bit in its own world. The other thing, the last couple earnings releases, you got big moves, but they were polar opposites. So I don't know what drives, evaluation in Tesla. There's a lot going on there that I don't know a darn thing about, but we'll see how the market reacts after the close tonight. It may be, let me just see. This was okay. That was interesting. No, that was right after the April 19th low when they had their last earnings. It was April 19th, so that was a big time low in the market. And maybe it was Tesla earnings, maybe it was the momentum of the market, or a combination of both that gave you that dynamic move to the upside. And then, last time there was a lot going on in the market. In the late July period, we had that, rotation between tech and the Russell stocks starting in mid-July. This was the middle of that. And then you got, the lower low coming in. That there you are, August 5th low. So it looks like the street didn't like the last earnings, and then you had all the momentum of the market to drive you into that low on August 5th. And we're fairly far above it, but yeah, looks like it'd be interesting to see what happens tonight. The reaction to the earnings in Tesla. And last but not least, only least in that the earnings are way out in time, November 19th. The stock that has created so much wealth in the last year and a half for people, NVIDIA. Let me, we are target 1, got a long way to go, in terms of the average, target 1 move. And let's see, that's September 6th, but there you are, that August 5th low. It was just a monster. And we've done nothing for the, we had a little bit of a sell-off, in early September, and it just continues to grind higher. So it'll be interesting. We'll be post-election at that point and see the market's reaction to whatever the new results are from NVIDIA on the 19th. So they're the charts I wanted to cover. Open to any comments or thoughts, please. Otherwise, back to you, Josh.
Hey, Joe, Dan here. A couple comments.
Hey, Dan.
Hi, how you doing?
Great.
Yeah, regarding Netflix, I think the AI is going to be one of the sectors or one of the areas that are going to propel the market up. And back to Dave's comment about the nuclear power companies, I think that's one of the reasons that you're going to see the nuclear power stocks taken off because of the amount of energy that's going to be required to run these data centers are just insane. So it's not just for EV cars. I think the big push is to be able to power a lot of these AI mega complexes that are going up. And the other one is, as far as Apple goes, I just was watching yesterday something. I guess Apple earnings are supposed to be pretty good because in China, they came out with the new iPhone, which has a lot of AI incorporated into it. And there was a hit in China. I guess it was up like 19% or 17%. So it's looks like that's Apple's continuing to be pretty ingenious as far as their stuff, and they, as we know, they have a good following. And as going back to the gold thing, the gold's been on a tear, and I think the reason behind that is there's concerns over impending currency crisis. I know, like Ripple, the BRIC nations are supposed to, I think they're meeting tomorrow, and their aim is to kick us off as reserve currency, as you know. And one of the things they're talking about is possibly using Ripple or some type of a gold-backed currency. So, and you just talked about earnings for next year, being a driving force. That's true. However, some of the big banks came out to their big customers. They're warning their big customers that because we had such a run up, in the market over the past 10 years, they're saying that the next 10 years, they're looking kind of doom and gloom. They expected, like, after inflation, they're talking like 1% for the next 1% a year for the next 10 years. So that's, kind of puts a wet blanket on that. And I'm just wondering how much if we have some kind of a black swan event, which it seems very likely, because right now you have, things like North Korea, they're putting troops in Russia for training to invade Ukraine, and, that could end up becoming World War III, or there could be a proxy nuclear wars or a proxy World War III, starting there. That's, not my words, but it, just tune into any of the, newscasts, and that's what they're talking about. And I think it's freaking the market out. And I think that's what you got a lot of people that are starting to, look at things like gold and silver for value. But anyway, those are just anybody else has anything they want, any comments to chime in on that? I'm all ears.
Anybody? Well, Dan, appreciate, a lot of different things there. And, I think Josh and I have a little homework assignment in terms of, checking out some of these nuke stocks, for some time over the next few weeks, as one thing. I think it's, and I saw a report maybe similar to what you were talking about, 1% over the next decade. I think the one I saw was talking about 3%. Jamie Dimon, quarter after quarter, is, doom and gloom is probably too strong a term, but he's forever, dark cloud guy. And then they come out and beat the street. I just find it hard to believe that all the spending on AI is not going to eventually get to the bottom line. And I'd just be darn surprised if we have another lost decade in the markets, personally. But that's what makes a market, right?
Yeah, and I think a lot of it depends on inflation. I mean, there's no guarantee that inflation is going to stay down at their target 3% now instead of 2%. But I think the Fed's stuck right now. They're trying to head off unemployment and things like that. And I think by dropping the rates, but time will tell. And this election is just kind of clouding the waters right now. Maybe after November, we'll be able to get a better handle on things.
Yeah, let's hope. And, we'll have earnings seasons behind us. And we know the expectations for, the next couple quarters are significantly more than they are this quarter. So,
yeah.
But thanks for the comments. Dynamite, Apple, it'll be interesting to see the results. I mean, they were,
Can you put Netflix up on your chart?
Yeah. And that was, let me see. I had it. Where the hell? Okay, let me just pull it up because big gap. And was part of that driven by AI?
I don't know if it's AI or not, but I know their subscriber base is they're just building up, across the world on it, So, and I think they're just going to keep driving forward, get more consumers to subscribe.
Yeah, I mean, it's a monster reaction after a pretty good run.
Yeah.
I mean, wow.
Were you just talking about Apple there? Which company were you talking about with AI there?
Netflix.
Oh, Netflix. I'm sorry. Okay. Dave, I was gonna just comment that I've heard what Dan is talking about, but I have not had any research to give me an idea why. But there has this regard to gold, and specifically with gold. There's been a lot of talk in other places that I dip into now and then about people asking about gold. How do I invest in gold? What are the different ways? Blah blah blah. So there's a lot more activity that I don't know why, or I can't answer Dan's question as to why I think that is, or why I have a good idea. So, but I did want to tell him that, there's been a lot more buzz on gold lately, and other forms, other places. Now with regard to what you were just saying, what Joe's comment was about AI making it to the bottom line. Well, I have a comment about that. Well, all the expense on AI has really gone into just a section of AI that's generative AI, which is what these large language models. So what is that? That's like the databases that the social media companies have. Those are large language models. They have people asking questions, people giving answers, blah, blah, blah. But the big expense to that generative AI and using these large language models is they got to be accurate. So there's all this discussion about training, which is in my AKA filtering out all the bad stuff on your data set that is false or inaccurate, is expensive. And this generative AI is not all of AI. It's just one. It's what, let's say a corner of a room full of AI. It's just a corner of it. So what's the payback on that? Wall Street's been asking that for a quarter now. We'll see where these, especially Meta, the Magnificent Seven are also usually the same stocks that have big data farm or big computing farms and so farm so much. And they're also the ones investing in all this generative AI. And I say generative AI being something different than AI, the generic word of AI. So I'm not sure that there's going to be that payback ROI on all those big investments. I think Wall Street's asking the same questions now. We'll see how they react to the earnings of Microsoft and Google and Meta, because those have been the big investors in all these thousands of GPUs that cost $30,000 a pop. Now they're going to try to monetize that. I'm sorry, Microsoft is the first one I came out that saw that with their Copilot. So they have a Copilot trial right now. It's if you stay on, it's like $200 a month. So $200 a month going into what, $30,000 per GPU times all the GPUs they bought. How many subscriptions are they going to have selling to normal people that are going to try to build a AI bot from Copilot? I don't think there's 2% of the general population that understand what AI is, let alone having to know how to build bots with AI from Copilot. We'll see. But that's a stock I would watch to see how their earnings, and if they break out ROIs for the GPU or for all the AI expense, CapEx. What's the AI CapEx versus the AI ROI? That's what I have yet to see in any of these big companies. They tend to say, well, our earnings is up, so obviously our AI is doing so well, right? Well, maybe yes, maybe no. That's what I think some of the bean counters are looking for. So those are the stocks that I'm going to watch the earnings and try to listen into all the conference calls on those big AI investing stocks companies, because I'm not sure that this generative AI is going to pay off myself. We'll see.
We will, but to your point, Dave, Wall Street's definitely looking for that answer. And the reason I have Meta up here is because they've been asking that question for a quarter or longer. Certainly, how is all this, CapEx spending translating? And I think Zuckerberg was one of the few, and I don't know what the number was, but I remember listening to some of the talking heads, and last quarter these guys did talk about specifically, how it was translating. And here's the reaction to last quarter. That was July 31st. You got a heck of a gap up, and then we know what happened between here and August 5th. The market sold off. But look at where this thing is versus its last release, and that's the one company that I remember, basically quantified some of that CapEx spend. We'll see. They're coming out next week. See if they follow up on that. To your point with Microsoft, didn't have. We'll see what they say. But yeah, that is most definitely one of the key things that the street is looking for with these companies with the big CapEx spends. And Dan, one last thing, you talked about inflation. Couldn't agree more. That is still, a wild card for the markets. No question, we're not just backing down 2% and going to sleep. It is definitely still an open question. So anyway, thanks everybody for your comments. Appreciate you joining. Josh?
Yeah. All right. We'll wrap it up. Thank you all for attending. We'll do it again next week. Thank you.
Yeah, thanks,
Thank
guys.
you.
See you guys.